Let's begin by talking about what I think is being generally welcomed across Kenya, the rally that we have seen in the shilling. We're seeing some strength coming back. What would you attribute that to? Is that the big stick of the central bank working?
Yes, I think it is. The central bank had made available a golden flood of liquidity via the discount window. The historical moving average over the last 12 months of the money available was 8 billion. It climbed until last week to 127 billion. And this golden flood of liquidity, I think, essentially was the come on to folks who wanted to short the shilling. The central bank is now being a lot more vigilant about what's going on, what people are doing with the money from that discount window. They raised the overnight rate aggressively, and I think they bared their fangs, and it's really scattered the short sellers in the shilling. So we've had a nice rally from an intraday low of 91.95 about 10 sessions ago. We're last at about 88.35, 88.40, and I think we've probably seen the blow-off bottom at 91.95, and net it's a positive. It had become very disorderly, very difficult for foreign investors, especially. They were keen to just wait and see. So I think this is a positive about turn, and I don't see us getting back to those low levels we saw not so long ago.
Do you think the crisis is over, Aly-Khan?
Yeah, I think, well, you know, you can never say never, but I think for now the central bank has done enough to stabilize the currency. Bear in mind there was a degree of contagion as well, Godfrey. The Tanzanian shilling hit multi-year lows, the Uganda shilling hit multi-year lows, and really I think ultimately there was no advantage to any of these countries to have an extraordinarily weak currency. We just don't have the elasticity in our supply to take advantage of it, and we were importing more and more inflation in a situation where inflation had really run out of control anyway.
What is going on here, Aly-Khan? I mean, some people are suggesting that what we're actually seeing is a repricing of Kenyan risk, rather than just the fact that, you know, there are some banks that were speculating. There is a suggestion that Kenyan interest rates were way too low and they needed to be readjusted.
Yes. Well, firstly, I think that's absolutely correct. We cut rates at the beginning of the year, and I think the only people that I could find who believed that rate cut was a logical idea was the central bank. A lot of credibility was lost at that time. We then had this burst of inflation, which has taken us up to 14.5% last. Bear in mind, we hit a cycle low of 3.1% in the fourth quarter last year. And majority of investors, whether foreign or local, were just saying, you know, it made no sense to have short-term rates so low. So I think by raising the overnight rate quite substantially, the central bank is signaling that they are aware that they're behind the curve and they're in this process of catch-up. And I think it's going to be a win-win for them, because by raising the overnight rate, they will also flatten the yield curve. And the yield curve had really run out of control as well, because bond investors were saying, you know, this is just not a scenario that we want to be in, and we're liquidating positions quite dramatically. So yes, I do think they're beginning to play catch-up. And I think, you know, they're catching up with the curve now.
Yeah, I suppose it's the constant problem of African governments, isn't it? You want lower rates so you are able to stimulate growth. At the same time, you cannot afford lower rates because you don't have enough money to stimulate demand in your own economy. But let's move over to the equities market now, where we have seen a remarkable performance by Aly-Khan. What is fueling the fuel marketer?
Well, bear in mind the overall index is down about 11% this year. You know, you've also taken a foreign exchange hit if you're investing from abroad, which makes it a cumulative total of about 20%. And then we got Aly-Khan, which has just surged off the charts. They put out a bullish earnings guidance. I think it was in the end of May, and we've seen nearly a 30% rally since then. It's a very interesting company. A lot of the big multinationals have been divesting out of the oil business in East Africa. Aly-Khan have been picking up the pieces. They've continued to expand their footprint across the region as far as Mozambique, Ethiopia, Zambia. And I think investors are finally twigging that this is actually a very interesting prospect. It trades on a trailing PE of 10. They've said that they're going to raise first half earnings about 50%, and I still think there's more room to run. But clearly this is the standout outlier at the Nairobi Stock Exchange at the moment.
Absolutely. Great African story. Let's hope that it continues.
Absolutely.
We saw yesterday the market up just 0.2% with volumes up at $4.3 million. What's the stance that foreigners are taking here? Because we saw yesterday broad gains across the globe with risk appearing to abate a little bit.
Yes, you know, it's quite interesting. The foreign investor participation has reduced in the last 8 weeks, and I think that was a function of the deterioration in the Kenya shilling, which encouraged everyone to stay on the sidelines. Now that we're seeing a return to stability in the currency, I think this was a natural pickup in the stock market. And you know, the stock market remains cheap on classic PE basis. We've had some very good corporate earnings. We haven't seen the prices react on the index really, except for the likes of Kenol Kobel and KCB and a couple of others. But essentially, I think foreign investors have been the mainstay for our stock exchange now for at least 2.5 years. I think they're going to start stepping back in. I think, Godfrey, really sub-Saharan Africa is more a story of international investors being very underweight versus the benchmark. And we're in this sort of sweet spot. Obviously, there is high beta around it, but essentially international investors are looking to get up closer to the benchmark level, which means there is a lot of macro buying in the background that comes back and forth.
Yeah, certainly we've been seeing some lightening of positions, because yesterday I was just going through the numbers provided by Securities Africa, looking across the performance of the African markets, and I saw yesterday Nigeria was down 0.7% on volume of about $16 million, which is quite a bit because normally their volumes are around $10 million. And at the same time, we did see Egypt cropping up. So it's a pretty mixed up picture, and it's not quite clear where they are putting in their money. In South Africa yesterday, we saw the market gaining.
Yes, no, I think, you know, it's an interesting point to make. I think obviously the Maghreb countries have been brutal for investors. Tunis is down nearly 20%, Egypt is down 26%. Wherever you care to look, you've taken some pretty big losses. I think those look to me as if they've done enough to the downside, but I don't expect a quick snapback because the political scenario remains to me very fragile. And I think, you know, if it's badly handled, then we could see a further lurch lower and a lurch higher in political risk. If you go down through sub-Saharan Africa, obviously the big wonder story has been Ghana, which is up 20% this year, set a new all-time high at the back end of last week, looks as if it's going higher. Nigeria, we're unchanged on the year, as you noted, but at a 3-month low. I'm constructive about Nigeria. I think the Naira, which has come back to 150, is signaling that there's a lot of positive sentiment. But near term, we've had this heightened political risk with Boko Haram. And then as you come lower to East Africa, we're down around 10%, but we look cheap to me. South Africa, obviously the gateway to most of Africa, and people still see South Africa as the portal into the rest of the continent. And I think that too looks to me a cheap market right now.